Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this is for Thursday, December 17th, 2020, about 6:15 p.m. It's the last full week of trading for 2020. Can you believe it? I'm looking forward to a couple of days off. I could use that. And nothing grows to the sky, but you wouldn't believe that the way these markets are going. We're in that void now where the dollar falls, everything goes up because of the lower dollar. We have a COVID bill that is coming. I don't know what it's going to encompass, but it's coming. I do believe the Congress will get one done. I don't know if the government's going to close down tomorrow. If they can't get one done tomorrow, they'll probably pass a 3-day extension quickly in the House and the Senate to keep the government funded. But I think you're going to get your COVID bill. And then the question is was it this to buy the rumor, sell the fact? Don't get me wrong. It's the Santa Claus rally time. Breaks in the market, I think, would be short-lived, and I think the market's going to have legs into the January timeframe pretty well. My problem gets after that, and as much as I'm counting that the COVID's going to get life back to normal, markets get ahead of themselves, and they have to play catch-up at times. And in the stock market, you need earnings to match price expectations of stocks, blah, blah, blah. It keeps going like that. So those are the things you want to be watching. When you take a look at the biotech, you fill the gap in the chart and you've been hanging in here. The trend is up. You have higher lows, higher highs. Take out 143.31, I'll feel different about the chart. Right now, as I look at this chart, you've got the bias up as you're over the 18-day average. The swing line is up. I don't want to see 143.31 taken out, and the upside target's 150.22. What about overbought, oversold? It still has an embedded reading. Now, if this 80 number closes under 70, let's say 78 or lower, I'd want to be out of that trade, even if the market didn't take out the 143.31. And the reason is you'd lose the momentum. Take out the 143.31 and lose that at the same time, it's probably an opportunity to back away from the market. SMH, no trend. I see a lower low and a higher high with an overbought market. As far as I'm concerned, there's better plays. When you look at the industrial sector, we have had a pattern here now of lower highs, lower lows, and the market gets up and over the 18-day average, closes under it. If the pros are short here, I think they have to have pretty tight stops, and I would think of it at 88.98. So is there much to do? I don't know. You're caught in this narrow band. What do I call that? Remember? It's called a pipe. When you get into a pipe, you churn more than you trend, and you get false moves, and you've been doing that. You've had to move under the 18-day average, back over, back under, back over, and all against that. Nah, I don't see anything to do there. In the energy sector, this market is not paying attention to the oil and the other markets. I'm going to have to learn more about this particular spider because it's been acting poorly. Lower highs, lower lows, but staying over the 18-day average so the bias stays up. And meanwhile, you had lost the embedded reading. Embedded means the red and the blue lines were sideways over 80 for several days or more. Then it was lost. You had a break, but you didn't get to the 18-day average. Then you re-embedded, made a new high, and now you're losing it again. Difficult chart. QQQ. We have a lower low, higher high, and a new all-time high. That's bullish. This is a new all-time high. I'm looking for a lot of resistance at 313, but if you get the embedded reading, then I'm going to change that opinion and say, no, it can keep pushing out on that. You need to have 3 days in a row where these two numbers stay over 80. So you have one today, you had one yesterday, not the day before. You've got to get it through tomorrow. So we have an overbought market that's near another objective running into resistance. That's how I'll phrase it. In the emerging market, this is a get out of town number. Now, I certainly don't see how under my work method I could have been in the market. I see the bias has kept the market bullish. The market hasn't closed under the 18-day average. And this is the first shot again of hitting that upper Bollinger Band. It's also probably one of the more crowded trades I've seen because I don't know an analyst that isn't, say, buy emerging markets. So you've got that. What about the embedded reading? Both numbers over 80 today. Yesterday, both numbers over 80, not the day before. So again, tomorrow. Should we walk into a Friday that has profit taking? Be a bit cautious. Also, some traders, normally at this time of the year, I'd be telling you, hey, traders are going to start leaving. They're going on vacation. We have Christmas next week. Well, Christmas this year means that you're leaving your living room and going to another room in the house in most cases. You're not going to see family and so on. So I don't know how that's going to affect trading. This is so unusual of a year. We'll find out. In the gold market, what do you do the first time you hit a Bollinger Band? Upside or downside? I teach, at least, that that's where you take money off the table. It's exactly what I see there. Uptrend, overbought, hit a profit number. Between here and the 100-day average, just more resistance. GDX knocked out its downtrend yesterday, not today. Right here, this 3604 took that out, knocked out the downtrend. Today, this market looked at Bitcoin, led the parade, then gold jumped in, the dollar falling down, and it said, I want to join you. My assets under the ground are worth a lot of money. And it did. It joined, but it's in a resistance point and not in a trend. As I look at TLT, I hit one button too much there. I still see this market fighting, but you have a higher high, lower low pattern. I don't see a trend to trade with. FXE, I'm surprised you haven't hit the upper Bollinger Band. The market is still very much on a bull roar. As I told you, I am looking in 2021 for this market to be in the 128, 130 zone overall. So that doesn't mean I'd have to relate what these prices are, but it's quite a ways from here, and I mean quite a ways from here to the upside. So you put it all together, you try to come up with a game plan. And my plan is simple. You're in Cyber Week. The year has been made or lost. Whatever's going to happen between now and Christmas and New Year's, wonderful. But let me tell you what I do. Each weekday at about 4 in the afternoon, I record a 20-25 minute video. I talk shorter term, the swing trades, and longer term positions. On the weekend, I put out a weekend edition of what I do, just weekly charts for the longer term traders. So when people say, Ira, I want something really longer term, I don't think you can go longer than weekly charts. Using monthly and quarterly doesn't make any sense. I cover the day's events. In other words, I'm going to tell you what reports are coming out for the morning in the market. I cover 40 different charts now. It's $8.95 for the first 30 days. However, if you want to buy a 1-year subscription to it, what do? I'm going to throw in my charting course for free. So how do you get this? Just go to our website at www.iraepstein.com under the word research. And right there, you can read about it and do what you want. As I said, unfortunately for many people, the free charting software ends tomorrow. So take advantage of it. I will see you all late tomorrow, I hope. Sometimes I put this video out on Sunday night again. It depends which way I want to go. But certainly Saturday morning you will have your morning video if you're a subscriber. I'm Ira. You take care.